Markets rally on Friday, holding key support, but can they continue that rally this week as we get ready to wrap up the month? That's coming up on 3 Minutes on Markets and Money. On Friday, markets rallied sharply off that 20-day moving average support. Now, markets had rallied above the 20-day moving average, taking out that resistance that really went all the way back here to those August peaks that we saw in that previous rally. Markets did break above that, came down, retested support, and then rallied sharply off that 20-day moving average Friday. That was actually good from a technical basis, and it was a 90% upside day as well. So again, kind of a real bullish confirmation that that previous resistance level has now become support. The question for today, with futures pointing a little bit higher prior to open, is can we muster a continued rally here over the course of the next few days as we get ready to wrap up the month? Now, a few things that are going on this week of importance. 45% of the S&P 500 will be reporting earnings this week. On Friday, the buyback blackout window that we talked about last week will end, and that will open up the potential for about $4.5 to $5 billion a day in stock buybacks starting in November. And then as the Fed meets next week to announce their next rate hike, hopes are now that the Fed will start to talk about slowing that pace of rate hikes. Now, doesn't mean they're going to stop hiking rates, and it doesn't mean that they're going to start reducing rates anytime soon, but the fact they're going to start talking about slowing the pace of rate hikes, that could be confirmed as more bullish news for the markets. Again, markets deeply oversold here, so a bit of a rally here won't be surprising. First level of resistance we've got to get through today is the 3,800 level. That is where those previous tops were at the beginning of that October rally that failed, and then we set new lows. Markets have been building a very nice base here over the last month. Again, holding those lows, and despite that little breakdown we had on the one day where the markets had a strong reversal after the CPI report, they've been relatively confined all month long. So a break above 3,800 then opens up the market for a rally to 3,850. Above that level, we're talking about potentially 4,000 to 4,100 on the S&P. So again, there's plenty of room for the market to rally as we get into the month of November. Mutual fund redemptions will slow down as we approach the end of the year. So again, there'll be a reduction in selling pressure and an increase in buying pressure from both corporations as well as pension funds, hedge funds, etc., rebalancing their portfolios for year end. Opportunity here in the short term is for a tradable rally. Be sure and use that to reduce risk in your portfolio, raise a bit of cash here. As we move into next year, things are going to get more challenging as a recession actually starts to appear in the economy. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.